When it comes to new traders, my general advice has always been to keep it simple. Learn some risk management rules, basic indicators, start out small. But do people listen? Nope. Look, I get it. I really do. You're suddenly thrust into this really exciting world of sexy-looking software with hundreds of indicators. It's exciting. It's new. And they're all saying, ooh, trade me. I won't tell if you won't. And all the while, there's me, only talking about a handful of the simpler ones. Now, it must be boring, but let me tell you something. This is an instinct you're going to have to learn to control because there are literally thousands of indicators out there. In fact, let's try an experiment right now. Okay, open a web page, go to google.com, then in the search field, type in Forex indicators, hit return, and you'll quickly be pulled into a deep,
never-ending vortex of confusion.
It truly is a jungle out there, and you can get lost very easily. I can promise you, you're better off perfecting some simpler concepts before you jump headfirst into that black hole of indicators. But since it's been requested so many times and by so many people, and the fact I'm not your dad, I'm going to be talking about one of the indicators that you have no doubt hovered your cursor over in a moment of morbid curiosity, and it's called the Ichimoku Cloud, and that's coming up right now. First things first, if you're a smart charts user, you're going to find the Ichimoku Cloud by clicking on the indicators icon here, and then you'll see it in the list roughly halfway down. Here it is. Click on it once to apply it to any chart, and then this monstrosity will appear. Now, this is so ugly. I mean, what is that? That really is a face only a mother could love, isn't it? First of all, look, let me level with you here. Up until recently, Ichimoku was something I'd learned about in the distant past. And when I say distant past, this is when I was trading on floors out in Australasia. More recently, I've seen it in the Smart Charts indicator list, and of course, it rang a bell. But I don't think it's something that's really ever resonated with me for some reason. But then my content man said, Greg, we have to do a video about Ichimoku. And I said, all right, fine. I opened up a new account. I started playing with it for myself. It was kind of neat. I strategized a little. I placed a few trades. And then this happened. Yeah, crazy, right? So let's show you how this indicator works. Ichimoku Cloud is a system of indicators, and there are four main parts to it. The first main part is these highlighted areas here, known as the Kumo Cloud. Yeah, cute name. Still ugly though. For the rest of the video, I'll be referring to this as the cloud. The second part of the indicator is this line here, known as the Kijun Sen. The third part is this line here, known as the Tenkan Sen. And the final part is the Chikou span, which is this line here. Let's go through each part one by one. The cloud itself is the space between these two lines, which are known as the Senkou span A and the Senkou span B. We're not concerned with the lines themselves, they're not important. It's the space between them that is of interest to us. So let's bin the lines for the sake of this demonstration and to make life a little simpler for my animation team. Here's a few basic rules. When price is above the cloud, you may only take long trades. When price is below the cloud, you may only take short trades. When the price is inside the cloud, don't take any trades. Do people listen though? Nope. If you can't stop yourself taking a long or short trade when price is inside the cloud, or if someone is pointing a gun to your head, at the very least, use half the risk you normally would. The other two parts are the Kijun Sen and the Tenkan Sen lines. These more or less act like moving averages, but they are calculated differently. The Kijun Sen is the slower moving average, the Tenkan Sen is the faster. When the Tenkan crosses the Kijun upwards, that's a long trading signal. When the Tenkan crosses the Kijun downwards, That's a short trading signal. Remember though, the cloud acts as a filter. Even with valid crossover signals, you must respect the cloud. Long trades are not allowed unless price is over the cloud, and short trades are not allowed unless price is under or below the cloud. This rule will reduce the number of trades you can actually take, but the beauty of this is that it forces you to be disciplined, which, if you remember, is one of the hallmarks of a successful self-directed trader. Last but not least is the Chikou span. Some would say this is the wild child of the bunch, but the Chikou span is very easy to figure out. Imagine a chart leaving a breadcrumb line of closed prices 26 bars behind the current one. In fact, if you could pick up this line and move it across by 26 bars, it would fit exactly with the closed prices of all the recent bars, like this. Let's put it back where it belongs for now and note that it always ends at the closed price of the most recent bar, except that it sits 26 bars behind. The idea would be to look for a trade entry first, respecting the cloud of course, and then look back to see if the Chikou allows it. If you had a buy signal at a point where the Kijun and the Tenkan cross like this, and then you check the Chikou span and found it was above price action, this would mean the trade was allowed. This is because the trend is deemed to be upwards when the Chikou is above the price action and downwards when it is below the price action. And then how we use the Chikou as an exit signal, I'm going to go into a little later when I show you some live examples. Now, if you like the explanation of how the Ichimoku Cloud works, I suggest you click the link in the description of this video and attend one of our free online web classes where we will break down the whole process from start to finish so you know how to risk manage, how to set the trades up, and most importantly, how to bank the profits and keep them. That's all going to be explained on those web classes. So if you haven't clicked on one of those, do it right now. In Smart Charts is several hours worth of the highest quality trader education material on the planet. There are modules that show indicators and strategies in a simple, easy to understand format like you've just seen, and it's all rendered in glorious 3D. It took a team of animators 2 years to create, and I can testify that there was quite literally smoke coming out of their ears when they finished. So now you have a basic grasp of how this indicator works. Let me show you a video of me firing it up in Smart Charts and taking it for a spin. If you look at how I've set the screen up, and if you look at my screen layout, if I click on that, you'll see that I've picked this screen layout where we basically have two screens which are not vertical, they're horizontal, one on top of the other. The top screen, as always, is the daily chart, which is always daily chart with the 50, which is the quarter of the year, on the 200. Remember, there's 200 or approximately 200 trading days in the trading year. So we know that when we've got the price above the 200, you can see on the Aussie dollar as a classic example, it's now dragging that 50-period moving average above the 200, which of course is our long signal, our sort of long casting signal, from which then we drop into the screen below, which is where we've got the Ichimoku set up. Now I'm just going to show you how you add that. So if you click on indicators, and you'll see I've got Ichimoku Cloud set up on here already. I simply just type in Ichimoku and it brings it up. I've edited it slightly, and I'll tell you what the edit is. It really is a cosmetic alteration. I've taken the Tenkan Sen, and what I've done is I've made it just a little bit lighter blue, purely for recording purposes here today, on a dark blue background that we use on Smart Charts. I really want that to pop and be contrasting, because it's that correlation, or the correlation of where Tenkan Sen is in relation to Kijun Sen, and when they cross, which is going to give us our long and then our closing position. So obviously on the Aussie US, we are looking for a long position. Then my cloud coloring is Senkou A is going to be green for obvious reasons. That's the period of time we should be long. And then my Senkou B is red as a red cloud. Obviously that's when we should be short. It's the size of those clouds which really give us the intensity behind the move. So the bigger the cloud, the more likely the trade is going to work out in that direction. So a big green cloud will expect long positions to work out well, a big red cloud, a Senkou B cloud, and would expect short positions to work out well. And then the Chikou indicator, I hope you like my Japanese, is the purple line indicator, and that is the one which tells us the early indication of when to close the trade. So let's put it all together. I've added that onto the chart and show you a few examples where this is good. Now you'll notice if you look at the top right hand corner of this bottom chart screen here, you'll see I'm looking at the 4 hour, that's the H4. So every bar on this chart is effectively 4 hours in time length. This is not something you want to be looking at on the 30-minute or the 15-minute or the 5-minute. That's just going to be too erratic, and it's basically going to look like a big spaghetti junction on your chart screen. So I want really clear signals. This is ideal for somebody that doesn't have a lot of time to day trade. They want to put positions on, they want clear signals, and they want a good idea of when this trade or if this trade is going to work out. They want some intensity of that cloud to know, is a long likely to work out, is a short likely to work out, and then some early indication as to when to close that trade and grab those profits. So let's have a look at the Aussie dollar starting out. So you can see, first of all, that blue line, which I've slightly or lightened slightly just for the contrast against that London backdrop in blue that we've got on the chart here, that Tenkan Sen. That Tenkan Sen says as it crosses up through the Kijun Sen, which is that orange line, that would be our, if you wanted to treat this as a trading strategy, it's more of an indicator, let's not forget, but this would be your long signal. So you'd be long here only if the cloud is beneath price action. So this price action here must not be in the cloud. As I said earlier on in this training session today, if the price is within that green cloud, you'd really want to put half of the risk on the table because you are bringing risk into the trading arena. So this is set up perfectly. Price is outside of the cloud, which means that the big green cloud, as it escalates along and grows in size, gives us certainty that there is power, there is buying pressure. The buyers are winning the war in this market. We've got the entry signal, if you want to use this as an entry signal, and it is a simple entry signal. This really is not for somebody that's in and out within 10 minutes. This is somebody who wants to leave the trade on and check it tomorrow. It's that type of trading strategy. But what you're going to see by doing that, of course, is that it gives you a much larger pip pull than it would jobbing in and out trying to grab 10 or 20 pips. So for those of you that don't have a lot of time to trade during the day, I think some of you are going to love this. Others of you are going to find this a little complicated. I don't think it's complicated. I think the terminology is complicated purely because I'm British and it's Japanese. But if you can get your head around the terminology and just look at what it's giving you some nice clear signals here. And for many of you that requested this on the channel, this is how I use it, and I have a team on our trading floors around the world use it. And it's in these trending market conditions, you can get some really fabulous outlooks here. So let me show you what that means. It means, first of all, that Tenkan Sen is giving you the long signal through the orange line, which is the Kijun Sen. So you would be effectively long here as long as price, this is price, above the green cloud. Now, as the green cloud grows in size and volume and price is further away from the green cloud, we're still long. So you're in here for many hours, sometimes even many days. That's how long this can last. I really do recommend you start with the 4-hour chart first. You can drop down to the 1-hour chart. I would not recommend that. Stay in the 4-hour chart because you're going to get nice clear signals, and we're going for big pip pulls here. You're going to see what this looks like, but this is not pulling 10 or 20 pips. This is pulling much more than that, a much greater range of pips. And then don't forget, of course, your stop, it's going to be some way away underneath the cloud. So, of course, the maths, if you can imagine, will ensure that your trade size is not gigantic. It's going to be within range to keep your risk at a sensible 2%. I'll show you how you do that in smart charts in a moment so you understand how to place the trade and how to trade size it. But most importantly, this is your long signal. Price stays above the green cloud as it goes up. Notice the separation of the Tenkan Sen and the Kijun Sen, which means there's a lot of power in this. This has been a reversal. We look up the daily chart here where we had that retracement from that phase 2 back to the phase 1 movement. Lots of pressure building up, cloud starting to grow, separation of line. That means you wouldn't want to close this trade yet. Hang on in there. Many of you have written me in and left comments and suggestions and questions about when do I close my trade? When do I capture my profit? You know, what is the right balance of that seesaw? Well, look, one of the biggest old adages of all of the trading gurus around the world is that people cut their profits too quickly and they let their losses run. Well, this ensures you don't do that. And for that very reason, we rank it here on the channel as a very useful indicator because it tells us, is there strength? Is there real strength behind this move? And when is that strength coming to an end? So if we track this across, we can see the blue through the orange line here. That's that Tenkan Sen through the Kijun Sen. We hold it. Price moves up. You can see the separation of those lines. And here's the interesting part. There's two exits on this trade. Now, I want to really draw your attention to them. The first exit, and this will be one that many of you on this channel will want to go for, is when this Chikou line, the little cheeky Chikou line, the purple Chikou line actually touches price. That could be your first exit. Now, you could ignore the Chikou line and say, well, actually, I'm not going to exit so early. I want to hang in longer. And in fact, I'll take my profits on the table when the Tenkan Sen, that's that blue line, I keep using these terminologies, and the Kijun Sen cross again, which is kind of around here. Let me show you the difference, the pros and the cons of both. If we take out our drawing tool, so let's grab that, and we go down to the measure, and I want to do time and price range, and I'm going to take it from where we would have, let's say, entered the position based off the crossing of those original Tenkan Sen and Kijun Sen lines. So that would be here. And if I then move this up to when the Chikou line takes us off the table. Now, look, there's a pro and a con here. The pro is you're getting a relatively quick profit. Let's just take a quick look here. You're getting 438 pips, which is not insignificant in a space of 47 hours. So let's call that 48 hours. In a couple of days, you're pulling 200 pips a day. That's pretty impressive. So it would be an entry here, an exit here, and grabbing 400 pips. So clearly, it's a very strong move that we're looking at. And that's just happened in the last couple of days here this week in the UK. Or anywhere in the world for that matter. This is the Aussie dollar. We're trading from the UK. Of course, you can trade from anywhere. But that would be the first exit. Now, if we decided actually I'm going to ignore the Chikou line. In fact, we could even remove the Chikou line from this so it doesn't distract us. I think users of my channel, and I hope I'm talking to you personally, I hope that we describe things in such a way whereby you can use other indicators. Clearly, I don't want a big dog's dinner all over the chart. I want to keep things as clear as possible, and clarity is better. However, I kind of like the way the Chikou line gives you that early indication. Now, two other things to be aware of. If we didn't use the Chikou line for the exit and we said, actually, I'm just going to enter on the crossing of the lines here, which is that Tenkan Sen and the Kijun Sen, and then when they cross back onto each other, which kind of puts us in this territory here, you are similar kind of profits, maybe 473 pips. So the Chikou is kind of, yes, it's getting you out early, but just don't forget, the moment you come out and you crystallize that profit, risk has been eliminated. So what the Chikou is allowing you to do is maybe you're not going to get the full pip pull that you would get if you waited for the Tenkan Sen and the Kijun Sen to cross again. But, whilst that trade, don't forget, anytime a trade is open, there is risk on the table, and that's your risk, that's monetary risk. So from a trader's perspective, I always think, when we call ourselves traders, we really are. We're either gamblers or we're risk managers. And traders are risk managers. And gamblers are people who don't really factor in risk too much. That Chikou line is helping you take the early profit. In actual fact, when you consider the amount of additional time you're having to stay in this trade to benefit from the Tenkan Sen crossing down through the Kijun Sen again, you're paying brokerage fees, you're keeping the trade open for longer, there's more risk on the table. A sensible, self-directed professional trader says there's a decent profit. If the Chikou line is giving me the exit, let's get the money off the table, let's crystallize it, let's bank it, and then let's move on to another trade. I much prefer that approach. So in my opinion, keep the Chikou line on here because you're getting a profit quicker. There's not really much in it. And if you factor in as an intelligent individual, the time that you're leaving yourself exposed to the market, there's intrinsic risk there. And of course, there's financial risk. Of course, you're paying brokerage fees, you're paying swap fees, you're paying overnight financing fees. And if you factor that all in, is it worth the additional 20 pips in this example? My answer to that would be not really. Just notice the cloud always is ahead of price by 26 bars. So we know that price is the cloud here is telling us there is still strength here. So you've got to weigh up your options here. Do I continue to trust the cloud? And the cloud says things look great because a cloud that's big like this can suddenly become quite small if there's a big market reaction. I'm all about, if you can make 400 pips in a couple of days, grab that money. Use that Chikou line and get your cash off the table, bank the cash and then go on to something else. Leaving yourself open and exposed, I think, is not the most intelligent idea. But this certainly indicates that there is further upside potential. You have to understand this has to factor into your trading plan, and your trading plan should drive this. If your trading plan says, look, I'm going to use this tool to grab profits, but my maximum trade length is around 2 to 3 days based on current market volatility and current market volumes and movement, then that's what you're going to do. Let's look at the euro dollar now. Same sort of thing, as you can see, very easy to show you the Ichimoku Cloud this week because of clearly we've got some nice cloud formations. You can place any trade and you can leave your take profit way up in the sky. What you can't leave way up in the sky or way down in the depths of hell, of course, is your stop loss. And so let's just talk about that for a second. So let's say I was going to be long at this level. Of course, price is all the way up here right now, but let's just kind of dummy play this a little bit just so you can understand how this would be done. So I would like my stop loss to be underneath the cloud here. So if my stop loss is here, let's say my entry would be here. So you can see, for this position, so I'm taking a long here. I've got my, one sec, folks. There it is. I thought that was a little bit too far down. So I'm taking like a 53. So I'm sitting the other side of the cloud. I've got a 53 pip stop. My take profit would be somewhere like here, but don't remember this. I don't know when the Chikou line is going to hit price. I can never predict that. So I might decide to keep my take profit just well out of the way. All I need to really care about in order to trade size this is the buy entry or the sell entry and the stop loss. The difference between where I get in and where I get out for a loss is my risk. Don't forget that. So in this example, and similar with the Aussie, if I'd have listened to what the system told me, what the Chikou line told me, I'm really risking, say 64, maybe 70 pips of risk, okay? In order to capture, maybe as it says here, 404. So the risk reward here is certainly well in our favor. But just remember, the larger the risk that you take from the entry price to the stop loss, the greater that risk. Of course, that must impact your trade size. Remember, trade size is automatically calculated for you on smart charts. You don't need to get your pencil and pen out for that. Certainly, you can see as I move those lines around, as I move my risk and entry lines around, it updates and changes everything on the right-hand side. If you've got smart charts set up with your trade ticket appearing on the right-hand side, you can change that in settings and have it appear on the left-hand side if you want. I like it on the right-hand side so I can focus on the chart first. So wherever I move those lines around, it will adjust that, which means if you're somebody that's out there that's watching this channel and you aren't using smart charts, first of all, you must be the craziest individual on earth watching this fabulous software do all the work for you and then sit there on bloody MetaTrader. You literally must be blowing your brains out. But if you are blowing your brains out and you are someone that is starting out and you haven't got the funds to use an intelligence system like this, then you need to understand the formula of how to calculate your trade risk. Basically, the greater the risk on the trade, the smaller the trade size. That should obviously make sense. So, if you're trading a $10,000 account or a dummy or a demo $10,000 account, as some of you are as you're starting out, you want to remember that you don't want to be risking more than 2% on any one trade. Well, 2% of $10,000 is $200. You would take that $200 and you would divide that by the trade risk. If the trade risk in this instance is 50 pips, let's say, for example, then 50 goes into 200 4 times. Your trade size would be £4 per point or $4 a point if you're trading in any other parts of the world. So that's how you would calculate the trade size. That maths, I think, is ridiculous to sit and have to work all through when a system as intelligent as this can do the work for you. So remember that with this Ichimoku Cloud on the 4-hour chart, you are factoring in more volatility. You are keeping that stop outside that cloud, which of course, with that cloud growing in size, it means the risk is going to be a little bit bigger, which means, of course, to keep risk, importantly, at 2%, the pounds per point, the trade size, the contracts, the lots have to be smaller to account and make sure, therefore, that we're only keeping our risk and we're not exposing ourselves to more than 2% risk on that $10,000 account. Of course, at £4 a point, you would be, you'd have made £1,600 on your trading account. 400 times 4 is, of course, £1,600, which, of course, on a $10,000 account, this trade alone, by risking 2%, you'd have made 16% on your trading account, which I think by anybody's scale is a good return on investment of your time. So that is how we use it. Let's just kill that because I'm not going to place that trade. That's already happened. I'm just going to show you a couple more. So sterling. Same picture again. Now, interesting, you can notice here, right, what is the problem with the sterling cross here? The problem here is you wouldn't enter this trade. I wonder if anyone can figure out why that is. Well, I'll tell you as you're probably entering comments, and please do enter comments as I go throughout these throughout these examples. Look, you are very much in the Senkou B cloud, which is the red, which of course is the sell cloud, which is the one which says, look, and you can see this is that turning point where it moves from one to the other. So whilst you'll have had your cross in the red, we don't place trades when the price bars are in the clouds anyway, but of course you would never go long while price bars are sat in a red cloud. So sterling, you would not have caught on the Ichimoku Cloud strategy. You would have caught the Aussie, absolutely. You would have caught the euro dollar. And looking just at the Kiwi now, that same thing, the Tenkan Sen cross through the Kijun Sen, this happens just as the cloud is forming. Now look, you don't have to buy when the lines cross. So just be aware of that. If they've crossed and you're in the red zone and now they're starting to separate and that green cloud is forming, you can go long. And there's nothing that says when the lines cross, that's when you have to press the button. That's ridiculous. The strategy here is if the line's crossed or is crossing or has just crossed and those lines are separating and that cloud is building up, you can enter that position. Remember, your stop is below here, below the cloud. That's giving you a really serious safety net. Some of you may wish to be more aggressive. I'm not interested in you guys being aggressive. I want you guys to be safe. So I think a stop outside the cloud is safety first. If you want to be closer to price action and then do an analysis on, okay, well, where really is support, which in this market you could see would be around here, you could place your stop there. It depends on your level of aggression and it depends on your level of risk appetite. So they're the long trades. Let's have a quick look at a short position, which of course is the dollar Swiss. Let's bring that up. And you'll see dollar Swiss here. Okay, how and when do you enter this? Now, we don't enter. Remember, when price is in the cloud, not a time to enter this position. We want to enter this when, of course, the Tenkan Sen has broken down through the Kijun Sen. That puts us in one of two areas. One would be here. Another one would be here. Remember, we're using the Chikou when it comes back, and the Chikou right now is here in line with current price action. When that touches the price, as it hits those price bars, that would be your early exit. So you could be short here, running this position, again, stop. Now, you can do two types of stop. One could be above the range, so above this resistance range here would be a sensible place to put a stop. But again, keeping the more risk-averse approach would mean placing the stop above the cloud. Remember, the cloud is now forming and getting bigger. It does reduce the trade size, which means you're going to get a smaller profit, but of course it keeps you safe, and I'm much more interested in you doing that. Now, you will note I'm a little bit bigger in that video because I lost myself 3 stone by becoming a marathon runner and completely hacking my health. In fact, I've become a biohacker in the last 3 years. And if you're interested in learning the tips, the tools, the strategies, and the nutraceuticals that I've been using over the last 3 years, click the link in the description and you can join my other channel, which identifies the tools, the nutrition, and the training schedule I've used to get myself into better shape. Helps you mental clarity and certainly helps for your daily energy. As much as I've enjoyed expanding my knowledge on this indicator, I'm sorry to say I think this love affair has come to an end. I always say that you should use strategies and indicators that resonate with you, and that means you personally. Each one of us thinks in a unique way. Our brains are wired differently, and this indicator is just not something I see myself using regularly going forward. Those of you who know me, I'm a pivot trader. I love pivots. I love Fibonacci pivot points. I love fib levels. And of course, you know, I love the 180 phase changer, the trend wave. I've developed them years ago in concert with a group of traders, and that's in my core. So it's something I'm not going to jump away from right now. That all said, I made this video for you guys because you requested it. So feel free to keep sending in your requests and my team and I will do what we can for you. Okay, guys, if you like this video, don't forget to hit like. If you're not a subscriber already, get yourself on the subscription list. You can do that by hitting subscribe. Thanks very much for watching the video. I look forward to seeing you in future videos. Until then, take care of yourselves and I look forward to seeing you within Smart Charts, my home of trading and your home of profit.